Welcome to NTD Business. I'm Don Ma. A few news updates today. U.S. memory chip maker Micron said on Friday it was committed to China and that it would invest $603 million over the next few years. This is going to be for its chip packaging facility in the Chinese city of Xi'an. Now, this is despite the fact that the company has been targeted by China's cyberspace regulator. Chinese officials last month said they would ban Micron chips from being used in key infrastructure projects. Regulators claim Micron, the United States' biggest memory chip maker, had failed a network security review. Micron in May forecast a hit to revenue in the low single to high single-digit percentages after the China ban. A Reuters review of more than 100 public government tenders found that Chinese authorities were scaling back purchases of Micron's chips before the ban. As for the $603 million, Micron's CEO says, quote, "This investment project demonstrates Micron's unwavering commitment to its China business and team." The investment will include buying packaging equipment from a Xi'an-based subsidiary of Taiwan's PowerTech Technology. Micron did not disclose the value of the deal, but said it would offer contracts to 1,200 employees of PowerTech's Xi'an subsidiary, and that the investment would create an additional 500 jobs. This would bring Micron's workforce in China to more than 4,500 people. And meanwhile, U.S. companies are sending about $1 billion a year to Russia's state-owned nuclear agency. This is according to a New York Times report. The report says that the enriched uranium payments are made to subsidiaries of Rosatom, and that the U.S. is buying the fuel that generates more than half of the United States' emissions-free energy. Roughly a third of enriched uranium used in the United States is now imported from Russia. And finally, the pandemic-era freeze on student loan payments will end soon, after 3 years. Student loan interest will start accruing on September 1st, and payments are starting in October. The pause on student loan payments will end this summer, regardless of how the Supreme Court rules on Biden's plan to forgive billions of dollars in student loan debt. More than 40 million Americans will have to start making federal student loan payments again. There's definitely going to be a hit to their monthly disposable income for some. The Bank of America Institute estimates around $180 a month for the median payment amount per borrower. According to an estimate by investment bank Barclays, the total monthly payment in student loans altogether could amount to nearly $16 billion. And this could mean tough decisions for many borrowers, especially those in already difficult financial situations. Out of the more than 40 million federal student loan borrowers, about 7 million are below the age of 25, according to data from the Education Department. Their average loan balance is less than $14,000. Borrowers with lower balances are actually the most likely to default. It's fueled by millions who drop out before graduating or those who graduate but struggle to find good jobs. Among those who defaulted in 2021, the median loan balance was around $15,000, and the vast majority had balances under $40,000, according to the Federal Reserve Bank of New York. And here to talk to me is NTD contributor Derek Dergino and risk consultant in the greater LA area. So I wanted to talk to you about student loan payments today. Seems like it's going to resume in a few months. It's been paused for 3 years now. How much of a burden do you think this resumption will put on students?
I think it's going to put a huge burden on students who carry these federal student loans, Don. The Consumer Financial Protection Bureau actually recently came out with a report that says 1 in 5 student loan borrowers, those that hold federal student loans, have risk factors or had risk factors going into that 3-year reprieve. For the pause on payments that could result in them having a harder time paying off their loans coming out of this reprieve. I believe it's September, where around 40 million Americans can expect a federal student loan payment to come due. And then 1 in 13 of those holders, it's estimated by the Consumer Financial Protection Bureau, have been behind on other payment obligations for other debt that are not even related to student loans. So as much as the 3-year reprieve might have helped students in the moment, they're coming out of this reprieve, some of them, in even worse shape than they were going into it. And in fact, the Bureau also estimates, and this is based on a sample-based study, so not holistic, but they do estimate that over half of the holders of this federal student loan debt actually increased other personal debt, whether that be credit cards, car loan payments, etc. And for whatever reason, Don, consumers, they tend to prioritize credit card debt and car debt over student loan debt. I don't know exactly why. I would assume it's because that's shorter term debt, whereas student loan debt is longer term. But over half, it's estimated, increased their non-student loan debt during that time. This is kind of, Don, an indictment on the personal finance habits of our society. Because what does that mean? When you increase all of your other debt during a 3-year reprieve on your student loan debt, it means you treated this 3-year reprieve as freed up cash, and then you spent it on other things and built your personal debt on your credit card or what have you. And some folks, they take out personal loans to pay off other loans. And so it's almost like a pyramid scheme of personal finance habits. Debt leads to debt, which leads to debt. You borrow from one institution to pay another, et cetera. And so, there are a number of factors that are really going to cause problems for folks to begin repayment, Don. Of course, you have inflation. You have higher interest rates. So folks who weren't locked in at a lower rate prior to the Fed hiking them could have, higher borrowing costs, and folks who took out student loans within the past year or two under higher interest rates could have issues. But just, pure fiscal irresponsibility, right, of folks that treated this 3-year period as freed up cash and took on additional debt.
Yeah, I mean, you made a point here about financial responsibility. Do you think that's the main reason why students or people who have loans are in this situation?
Yeah. Well, you can forgive debt. You can forgive or delay debt payments all you want. But Don, it creates a really rotten incentive system in our economy, and it conditions the society to think that it can live a lifestyle that it simply cannot afford. And as we're seeing these loan reprieves or delays, it will not stop people from continuing irresponsible personal finance habits, and it will not stop people from finding other ways to take on debt. As I said before, debt feeds debt, which feeds more debt, right? So people need to be conditioned to be responsible for their personal financial situations. Don, a moral society does not teach itself that it can borrow money from other people or institutions without recourse and without responsibility of repayment. A moral society does not teach itself that it can indulge in whatever it wants without recourse. Okay, and like I said, a moral society does not teach its people that they can run their own personal finance like a pyramid scheme, borrowing from one institution to pay off another. However, while Americans as individuals struggle with this, our own federal government, Don, as you know, doesn't set a very good example. It does the same thing, but on a larger scale. The only difference is that the Fed has a printing press and your average American consumer does not, right? And so boy, does it drive up inflation when the Fed pumps money into the supply, and boy, does it make it harder for folks to buy their groceries without indebting themselves. And so another cause of this, Don, is while much of this does boil down to individual fiscal irresponsibility of individuals in the society, much of it also stems from a corrupt incentive system and a lack of care at all levels of government who foster this system. And I'll add, people over the last really few decades have been too willing to indebt themselves really into bankruptcy even just to go to a traditional 4-year college or university. Just a quick note here, America's going to see a shortage of about 400,000 welders by 2024, and they're going to see a shortage of hundreds of thousands of plumbers within the next few years. Do you think the American infrastructure can uphold itself with that? I don't think so. And meanwhile, we're telling our youth to take out loans that they'll never be able to afford to repay. And for what? I mean, the average cost of obtaining a degree from a trade school, Don, is around $30,000 or so. You contrast that with the average tuition of around $130,000 for a bachelor degree. And depending on the trade that somebody specializes in, they can earn more than your average bachelor's degree. So again, I think it's a rotten incentive system. I think we're pushing four-year colleges and universities on folks, not opening their eyes to other opportunities that are more fiscally responsible and can actually drive higher fruits of their labor and make them more money.
Yeah, there's definitely been a shift in the U.S. economy. It's more services driven now. Before, it used to be more manufacturer driven. So this shift may have a correlation as well. But let me also ask you, students, people who have loans, now they weren't paying for about 3 years. Now they have to pay. That means their disposable income on a month-to-month basis is about to decrease. And that means they'll have less money to spend on things, for example, clothing. Is consumer spending going to decrease? Is this going to have an impact on the economy?
I think you could expect consumer spending to taper off a bit. That paired with inflation, which although decreased is still prevalent, that paired with higher interest rates, which already incentivize people to save their money and not spend it. That paired, again, with recent bank failures that led to lending restrictions. So there are a lot of forces in the economy right now, Don, that are incentivizing folks to not spend, right? If you ask the Fed, they probably think that's great because, again, they've been tasked with a mission, and that is to reduce inflation. And there's really two main ways you can reduce inflation: suppress consumer demand or stop printing money. And I don't think the latter is about to happen, right? And so if you ask the Fed, yeah, probably consumer spending is going to taper off a bit, especially as people now have to shoulder this new or old debt really coming out of this 3-year reprieve. But the Fed probably wants that, right? They want to taper off consumer spending. They're still trying to bring down inflation. But to your point, yeah, at the expense of economic growth and consumer confidence and consumer spend, sure.
I see. Now, do you think, in your opinion, should we not have paused student loan payments?
The 3-year reprieve, I believe, started in March of 2020 during the peak of COVID, right? Where the governments, local, state, and federal, were essentially shutting down businesses and stripping people of their livelihood and income source. And so was there a case to pause federal student loan payments? Sure, because if you're going to tell the society that they can't work anymore, that they effectively can't make their livelihood anymore, how are you going to expect the society to pay off its debts? So there may have been a case at the beginning of this, at the peak of COVID, but this has been extended. The reprieve was extended, Don, I think it was 8 or 9 times, including as recently as 2022, that it was extended another few months. And so now you've had this 3-year reprieve, perhaps too long of a reprieve, but at the same time, the government, local, state, and federal, made its own bed here during COVID when it decided to tell people that they couldn't engage in commerce anymore for a period of time. So again, a repercussion of some decisions that were made during the height of the pandemic that I don't necessarily agree with, but kind of helped make the bed that we're in today.
Do you think perhaps in the future, I mean, this sort of thing should not happen? For example, people should be responsible to their debt from the beginning.
Yes, but again, I think the root cause of why folks are taking on so much student debt that they can't repay has to be addressed. And in my opinion, it can be addressed in a couple of ways. One, the society desperately needs personal finance education starting at a young age. In the United States, we do not have enough of that, Don. People do not know what it means to take on debt. Okay, a lot of people treat it as free money. People treat debt forgiveness or debt delay as free money, and they use it to spend on other things, as we just discussed. That root cause needs to get addressed. And the root cause of the obsession of our youth with going to a 4-year college or university, that root cause needs to be addressed. I can admit, I went to a 4-year university. I got a master's degree done. I studied public accounting. But that degree was put to use to deliver value for my clients and to ultimately return value to myself. there are certain fields of study that don't have that return on investment. And I think we need to be blunt and honest with our youth as they're going through these decisions as to whether four-year university is right for them or not.
I think another factor at play here may be that it's hard for some Americans to change lifestyles when they're accustomed to a certain standard, even at the expense of taking on more debt. What do you think?
You're absolutely right. And what I always tell people is that responsible personal finance is a journey. It's difficult to flip your lifestyle like a switch like that. It is somewhat of a psychological journey. You have to really engage in some honest introspection and understand why you make some of the decisions you make in order to turn the page and go in a different direction. So it's not as easy as somebody on television, yourself or myself, telling people, hey, be more responsible, stop taking on debt. It's a little more complicated than that. Again, I think if responsible personal finance habits get drilled into the minds of our youth when they're young and in school and learning, I think that will help address some of the issue. Again, I can't say this enough. We have a deficiency in personal finance education, particularly at younger ages in high school, middle school. So that can help. But again, it is a psychological journey to be able to change the financial decisions that you make on a day-to-day and understand why they're destructive and why you make those decisions in order to correct them.
And do you think there's a factor of the culture around us influencing how we think? If you look on social media, there's plenty of videos talking about how you can get rich quick, videos of people with nice cars, nice houses. Maybe the culture is playing a major role as well.
I agree, and I may catch a little flack for this, but I think the cryptocurrency culture has driven some of that, being able to sit at home and gamble on highly volatile crypto securities to get rich quick, as you said. There are obviously responsible crypto brokers and responsible crypto traders, but that trend did permeate the society a bit. During COVID, when everyone was at home, everyone all of a sudden became an expert day trader through Robinhood or otherwise. You had the whole GameStop revolution and so forth. Yes, you have over the past few years have had a lot of forces that have pressured the society into thinking that it can get rich quick. You can't really get rich quick. Very few people find that good fortune. So yes, I do think the culture drives some of this a bit. I also think that we compare ourselves financially to our neighbors a little too much. It's good to compare one's own performance against their neighbor for the effort of betterment, self-betterment. But if you're doing it because you covet your neighbor's wealth and now you'll do anything and everything to get rich quicker, and you see this, on social media, through TikTok influencers, Instagram influencers, or even friends and family that who might make more money than you, who might be in a better financial situation than you, and you covet their situation, their wealth, it can lead to destructive behavior. That is why the Bible says that you shouldn't covet after your neighbor's belongings and situation. It drives downstream destructive behavior.
I mean, that's the principle, but I guess it's very difficult to practice that in real life. I mean, you have to have very strong willpower sometimes.
Absolutely. And again, I think that's why it's important while folks are young and impressionable that they get educated on personal finance. I'm not saying that you have to teach a 12 or 13-year-old about, mortgage loans and, hedging securities and all these complicated investment, personal finance topics. But, the basics, right? What is an annual percentage yield? What are interest rates? What does it mean when you borrow money from somebody, right? It means you're going to have to repay that person or institution, et cetera, et cetera. There are basic tenets of personal finance that our youth do not have instilled in them. And then they go onto social media and they see everything that everybody else has, and they covet that, and they strive towards that, and they make they engage in destructive behaviors to try and achieve that. And more oftentimes than not, they don't achieve it, right? and they take on $250,000 loans to go to four-year universities to study philosophy or communications or something, which just frankly have low return on investments, and they end up in the situation that they're in. Which, by the way, taking on debt like this that you can't repay, it has, aside from tapering consumer spending when they have to repay this debt, it has other downstream grim impacts on the society. Okay, indebtedness happens to be a fraud indicator and crime indicator. And I believe the NIH has come out with studies on this. An indebted society tends to commit more crimes. So I know it's a little bit more of a stretch or downstream impact of all of this, but one destructive behavior, something as simple or as little as something in your personal finance habits, multiplied across millions of people in the society can deliver grim impacts.
Well, let's end on a positive note. Let's think of some solutions here. How do we change this mentality of wanting a better lifestyle, better than what your financial situation can support?
Starts at home with your family and your parents and your role models. Okay. I talked about tone at the top with the government. Well, the government has a printing press. They engage in some of the most reckless financial decisions history or mankind has ever seen. But forget about the government. Start in your own home. Okay. It is very important for parents to set an example for their kids. Okay. My parents set a great example for me. Okay. Growing up, we didn't, you hear the term live within your means. No, we lived below our means. Okay. And my parents saved up money and they were able to get me through life with little to no debt. So it starts at home and setting a good example for your kids and also living below your means so that you have something put away for a rainy day. Okay, that's a solution. I already mentioned the other solution is education. Okay, and then the third solution for folks who are further along in their life, who've already found themselves in a difficult personal finance situation, it's a journey and it's a psychological journey, right? And so they need to just be willing and open to engage in honest introspection, to receive feedback from friends and family who might identify reckless decisions from the outside looking in. And I think it's incumbent, if you have friends and family that you're seeing destroy themselves with their personal finance decisions, to rein them in a little bit and give them some honest feedback. What are friends and what are family if they're not a sounding wall and they're not somebody that can keep you in check, so to say, right? So, be a good neighbor to your friends and family and help them understand like what you're noticing that they're doing that engages in destructive behavior. We talk about addicts, right? You talk about the intervention, right? And being honest with them and saying, listen, you need help. You need to get help, that these behaviors are destructive and we see your life is falling apart, right? Similarly, when it comes to the world of personal finance, people oftentimes need that third-party sounding wall to come and tell them that what they're doing is reckless. Because when somebody spends money on something, Don, that they don't need or that they can't afford, it's usually to fill a void on the inside, that's something that's missing, right? Some sort of validation. And so to kind of be a good friend and be a good mentor to those that you know and keep them honest about themselves and decisions they make, that's also huge as well.
Yeah, and just one more point I would like to add. It's not about how much money you make. It's about being financially responsible. You can make six figures and you can still feel like you're not getting ahead in life. But thank you so much today, Derek. It's always great to talk to you.
Thanks for having me, Don. Look forward to our next chat.